Hey guys, Mike here. Oh boy, what a day in the market. I mean, that was a whole bunch of red, right? I mean, it kind of caught people off surprise probably, but this is a jam-packed video. We're going to get into all that, the charts, what happened, what to expect tomorrow. Also, what's going on? Why is the market reacting how it is? And there is one thing happening tomorrow that absolutely could move this market. But, I saw this right here, and I thought, I don't know if this is the bulls or bears. Surprised by what happened there, I'm not sure. I think this is the short sellers taking their profits and going home right now, or maybe even holding on. Let me know in the comments if you're doing that. But again, never hurts to take profits, that's for sure. And it's one of those things where we talked about, like, what is this rally, right? What is the whole premise of the rally since basically December started roaring? Is the fact that this soft landing, the fact that the Fed was going to do what? They were going to pause sooner rather than later. The terminal rate wasn't going to be as high as it was. They were going to cut starting in like July or August, right? That's what it's based on. So what is the market doing? It's like, oh boy, we got to sit here and make some corrections, right? Because what we talk about, the bond market has been screaming by virtue of the yields doing what? Going up all over the place, right? And so this is what the market right now is trying to price in, okay? What else is going on? All of a sudden, wow, in March, 50 basis points is actually a question mark now. It was 0. Now it's 25% almost. They're thinking this, okay? And of course, like I tell the members, I'm not sweating this until I see my boy Nick on Twitter, Nicky Leaks, whatever they call him, who gets information from the Fed, comes out and says what he got to say, all right? When he says it, then I'll probably end up believing it because he's been right so far. Eventually, he'll be wrong. But until then, I'll wait it out and not even think about that. Now, of course, what's caused this rally, right? And here's what's caused it. This right here, look. Bets against big tech have proved expensive this year. And you can just see, I mean, these are the top shorted stocks out there, right? And all of them had huge runs, especially Tesla. And I showed you guys the short volume on this thing is through the roof. And a second thing, and then I'll tell you a third also, which is what I told the members yesterday, we're using margin debt again, right? Remember, retail's putting in $1.9 billion a day, and that's a big pop in margin right there, right? And that's what we were waiting to see. Again, this is lagging data, but that's January. That's a big move up when it comes into billions of dollars, right? And so you will not have any kind of bull market rally without margin being used. That's just the way it is. And you can see right here on percentile change as well. You don't see as big a move when you talk about percentile. And you can see, is it going to be a fake out? We'll have to see. Like there you saw one. There you saw one. So we'll have to see. Now another one, you wouldn't think this is what's holding this up. You think it's bad news. And it is for the real estate market. But we got existing home sales coming out today, and of course, what's happening? They're falling off a cliff. And so the market's like, oh my goodness. You can see right there, I mean, that's a huge move down, and it's been moving down. And why? Because rates are high. Houses are really expensive, right? You see the month over month gone down again. But the big thing that I take away from that when I see that is, everybody wonders why the consumer's been able to hold in there so long, because you've taken the biggest ticket item away. Right? A lot of people can't get approved for the homes, and then other people are going, I'm not paying. Even they can get approved, they're like, I'm not paying that. I mean, the interest rates through the roof, the housing prices are higher. So guess what? That is money, and you probably know people personally have done this. You might have done it. I know people have done it. They took that down payment, and they said, forget this. I'm just going to put it in the stock market or the bond market or something else, right? But it keeps them going. They can pay for vacations. They can go pay for all these other things we're paying for because the biggest ticket item isn't being sold like it normally would be. Right, and then of course the third biggest ticket item was obviously student loans. Don't have to pay that either. So there you go. Right, so that's another thing you have to think about when it comes to holding up the consumer. Right, so the longer the real estate industry stays down like that, and people aren't buying homes, and I even showed you where because the homes got so expensive with the interest rates, that like for the first time in years, rents and homes were almost even in a lot of areas. And so that's another thing. Usually rents were higher. That's why people were going out and buying homes, but now, with the interest rates and the mortgages going up so high, in a lot of areas, it's not that way anymore. And so that's something else we got to think about. And, this leads me into something that just, I don't know, it's frustrating more than anything else to me. But when we talk about inflation, like, this is another thing where all of a sudden we get sticky inflation. Shocker, I can't believe it don't come down rapidly, right? And I say we will get to a point, right, that how's the market going to react when it don't come down by 0.4 every month? And so, of course, the new calculations ended up not coming anywhere near what people thought. It still came down some, but nowhere near as fast, right? But here's the crazy part, and for those who don't know this, I got to ask a question. If you were going to rent your home out, right, would you just, how would you do it? Would you call your neighbor and say, hey, what do you think my home can rent for? And they say, 1,500. You say, all right, cool. Put it in your yard, 1,500. Or would you actually start contacting and looking at actual companies that do this for a living to get the actual data of the homes in your area that have actually rented that are comparable to yours and things like that, or call a management company that does it for a living to get an idea? Well, which one would you do? I'm just curious, right? I know which one I would do, right? Because I've done it before. Maybe you have too. But here's the crazy part is, here is the U.S. rents versus U.S. shelter CPI. Again, follow Charlie Baleo over at Twitter. He does a great job with this. And you might notice something here. Rents were going sky high, right? All of a sudden, how fast they're going up dropped off a cliff, right? So still going up, but nowhere near as fast. But then you look at the shelter CPI, and it just keeps going up. And you're like, wait a minute, what's going on? Well, now they have made shelter one of the biggest components, even a bigger component of the CPI, right? But they're using such old data, and the way they get it is simple. They literally call people up and say, hey, what would your house rent for, you think? Now you got to ask yourself, I know if somebody called me out of the blue and said, what would my house rent for? I wouldn't know, because I'm not planning on moving or renting it out. I have no reason to know this. I can go look it up real fast. I can come up with a calculation. But again, how many people are going to know that? And so, and then what if somebody just says, well, I'm too lazy to go look it up, and I don't really want to look it up. So $700, $900, whatever, right? But that's how they're doing it. And that's just crazy, right? We're talking about in 2023 where we got robots and artificial intelligence, and you're literally calling people on the phone, collecting this data. And this is really important data, right? When at your fingertips, or a phone call to some of these companies that do it for a living, you could get accurate, up-to-date data. Isn't that mind-boggling that we do that? Am I the only one that just there shaking their head going, what are we doing? Right? I mean, that is absolutely insane. But that is one thing that's going to cause inflation to stay higher for longer, because of this data they're putting out there anyway. And that's just nuts. And guys, if you're getting anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And so, those are things, that's what the market is trying its best right now to try to price in, right? It's like, okay, we got ahead of ourselves. And that's what they want to tell you, but they knew. And now it's like, okay, well, maybe they're going to do a 50 basis point hike. That's what they want you to believe. And then like, oh, and then they're not going to cut. Well, I don't think they ever were, right? But that's what the market does. That's how these kind of rallies work. And again, as long as we don't go back in the channel, and we stay above that, and just, I think personally we'll be in a range for a long time, but some people think we're just going to go to the moon. But that's what you got to just keep in mind, right? So we're looking at SPY. Again, we're going to 43 or 3,900. Well, obviously, we're accelerating to 3,900, and we can see, obviously, you got that trend line right there. We still got to break through. You got another trend line right there. You got to break through. And then you got the 3,900. So, could it happen? Sure, it could happen. We'll have to see. Is it going to be in, one fell swoop? Not sure about that. And one thing to keep in mind is we're already at the weekly expected move, right? That I tell the members about all the time. And so that's something you got to think about as well. And when we zoom in, something else to keep in consideration is RSI just broke below 50. We already talked about the MACD bearish cross yesterday. And when we look at the shorter time frames, just for the shorter time frames, you can see, we got these gaps above the fill. You got the RSI on a lot of short-term time frames oversold, okay? So don't be surprised if you see a short-term bounce or just trading sideways. Again, this is what happens. It gets oversold, it bounces, it gets overbought, it gets sold off. And so that's something to keep in mind as well. And another thing you got to keep in mind, as we talked about, what do the big boys do? They put a record number of VIX calls out there. They bought a record number of VIX calls, waiting for a spike, which means the market drops. And then the big boys like Ray Dalio and them also bought just a crap ton of puts, right? I think they expire in March, if I'm not mistaken. Could be wrong. But, to drive the market down. And of course, they can do that, right? They put a lot of money out there. They run this. They run billion-dollar hedge funds, right? And so that's something you got to keep in mind as well. And then looking at Tesla, it's sitting right there. We talked about that anchor VWAP yesterday, and it actually broke through it right at the end of the day, the one from February, which it had respected multiple times, you can see. And it's going right back down in that range we had talked about, which is going to be hard to break out of, which it did. And again, that's a big range. But remember, it's a heavily shorted stock. And of course, as it goes down, people pile into it more. But again, if it starts to move up, what are you going to see? Shorts covering again. So this one, to me, a lot of people are expecting a big drop. And that could happen because that's Tesla. It's a very, very volatile. But, it's built some support up there. So I don't think you're going to see like it did a month ago when it just fell like it was raining or something. Again, though, you got the MACD cross down below. It's not overbought anymore. We'll have to see. It's its own ecosystem. I'm waiting for that trend line. Again, I've been saying it for a while now to get tested, right? Does it break that trend line? If it breaks that, yeah, I definitely see us going quite a bit farther down. But I'm going to wait for that to happen before I make any decisions. And then, of course, Meta, you may be thinking, oh, wait a minute, Meta actually went up today. How could that possibly be? Because it's supposed to be filling this gap. And then it just sold off immediately and then just traded sideways for the rest of the day. And before I tell you that, just, I went and put this anchor VWAP on here. This is the year-to-date anchor VWAP. That's really going to be what the next resistance I'm actually looking for is only about 6% away, just FYI. And again, will it fill the whole gap? Not sure about that. But the reason why it went up today is because they rolled out a new subscription service to make more money. And so the market was like, woo, that's fantastic. And then immediately it said, whatever. And so it did fill one of those gaps we talked about with that pop. Again, you still got one more gap within the gap there that needs to be filled. Now, IWM, I put this out to the members last night. It's talking about, it needs to choose a path because it was wedging right there. But it's had a lot of false breakouts, so I wouldn't make a bet on this. Well, of course, today, where'd it go? Right back down into that channel, which has been in, it seems like, forever. So it broke out of this, back down in there. Obviously, RSI goes below 50. MACD's already had a bearish cross. So we'll have to see if we get, so it seems like another false breakout, which one of many. And that leads us into earnings, right? So the big ones, and the more I don't see anything, NVIDIA, Lucid, Unity, Etsy, Teladoc, we'll see if that thing still goes on a run. I mean, I don't know why it would, but again, we'll see, because right now, it's like people are trying to come risk off. But again, we'll have to wait and see on that. The only thing going on tomorrow, which you got to watch out for, and this can absolutely move markets, is going to be the FOMC meeting minutes, which leads right back into what we talked about. The rates. This is going to show us the dot plots, okay? It's going to show us how high they think it's going to go. And if that rate is higher than the last dot plots, absolutely could see the market sell off. Absolutely could see it, right? And I don't think we saw any cuts in there last time. So I don't think we're going to see any cuts in there this time. But again, you're looking for change. And again, it's how the market reacts. The one thing I want to see on earnings, though, is how does the market react? Because you've seen these garbage earnings coming out, and the stocks still go up. A lot, some of them, right? But what happened today? Walmart, Home Depot, both guided down 2023. So it's going to be a rough year because of higher prices and stuff. They don't know how well the consumer is going to hold up. They'll buy the cheap items. Don't know about the more expensive items, right? So we're going to have to see on stocks like NVIDIA, which has ran up a huge amount, right? And it's held up really well. A lot of semiconductor stocks has. If the earnings come across like, it was okay, how is the market going to react? Is it going to do the same thing and just keep pushing it higher and higher and ignore what's happening out there? Or not? That's really the big thing, right? So we're just going to have to see. And like I said, multiple times, and I'll continue to say it. When all the short covering's over, when all the FOMOing is done, people don't want to use margin anymore, and they ran out of cash because they put it all in. What kind of market are we in? That's really what you're just waiting to see and just be patient with, right? And so we all know. I don't know how people are saying the second half of the year is going to be better than the first half, but that's what they're saying. I'm thinking, really? What do you think down in the comments? Let me know. I would think the second half would be worse than the first half because the rates are going to be extremely high. But again, and then inflation ain't coming down, it gets stuck. That's not good, right? So I don't know. We'll have to see, though. Anyway, if you got anything out of it, hit the like and subscribe button, and I'll see you guys tomorrow.